Hey guys, I know that many of you are very interested in SOXL. I had tons of comments asking me, what do you think about SOXL? What do you think? Should we invest in SOXL? SOXL went up over 500% over the last 1 year. Should we invest? And my answer to that is very nuanced and mostly no. I don't have SOXL in my portfolio, and I'm going to show you exactly why I don't invest in SOXL and what's the better alternative to SOXL. Okay, without further ado, let's get into it. Alright guys, my name is Henry. I'm here in Hong Kong, rainy day, but I came to the office to record these videos for you. And I'm going to answer whether you should invest or not in SOXL and why I'm actually not investing in SOXL. So SOXL is the 3x leverage ETF of SOX, which invests in the semiconductor index. In this semiconductor index, the biggest holdings are at the moment Micron, AMD, Nvidia, Broadcom, Intel, Applied Materials, Marvell, Lam Research, TSMC. You know most of these names. But the thing is that the semiconductor industry, it has been very volatile. And as you know by now, because you have been watching my videos, right? Leverage ETFs amplify returns, but they also amplify volatility. And if you have a sector or an underlying asset that is too volatile, that amplification of volatility will destroy your returns. Now, of course, when you look at the chart and you see like over the last 1 year, an ETF has returned 500 something percent, or to be more specifically, actually 600%, as I'm going to share with you here on the chart. You look at this chart, wow, went up almost 600%, right? While SOX, the non-leveraged version, went up only 129%. So you should invest in this XXX ETF, no? And no, don't do that. And I'm going to show you exactly why. And it's all about the volatility. You see, SOXL is amplifying the volatility of already very volatile asset, okay? And I'm going to cherry pick here a specific date, but look at this. If you have invested in SOXL at the start of 2022, okay, although it's a XXX leverage, and although the underlying, the 1x leverage ETF, SOX, went up pretty much all the time, 240%, SOXL had a return of only 169%. Why was the return of SOXL lower than SOX? And the answer is volatility. You know, I have been talking also about volatility decay and why volatility decay is okay if you expect that the volatility is not too high and the returns are good. Now, the thing with the semiconductor industry is that the returns are good, but volatility is not okay, is too volatile. Okay guys, so I just plugged in my Kelly Criterion curve indicator and I explained how to use it in my Henry Wealth Academy. In my Henry Wealth Academy, you can find a 5-hour-long leverage ETF course that you can take for free, because you can subscribe to the Academy 7-day free trial. If you don't like, or if you finish the course before the 7 days of free trial finish, you can cancel. But I guess you'll probably stay around because I give tons of value there. You have my trade alerts. We have 81% at the moment, 81% win rate and over 30% compound annual growth rate, which is pretty good, right? So check the link in the description to join my academy, and if you want to stay after the trial, you stay. If you want to cancel, no questions asked, okay? But let's go back here into the chart, and what we see here is that the Kelly optimal, so the optimal leverage, the maximum leverage that you could use in SOX, in the semiconductor index, would be 2.4. And we should never use the Kelly optimal because that's already too much volatility. So the advised will be half Kelly, and half Kelly is at the moment 1.2 only, okay? So if you want to use some leverage, you could use, but not the 3, because 3 falls here in the never logical, as you can see here. Because if you are using 3x leverage, you start to have the so-called volatility decay. This is why I don't use a 3x leverage for semiconductor industry. That's too much volatility. And of course, if you can time the market perfectly and the market is just going up, you'll do well. But I'm a long-term investor. I'm not trying to time the market exactly. So I'm going to stay away from SOXL. I think no one in the world can exactly time the market. I'm going to stay away from SOXL. So, Henry, what will be the alternative, a better alternative to SOXL? And my answer is, can you guess? Okay, if you can guess what's the best alternative to SOXL, let me know in the comment section if you have guessed before I type it here. And my alternative is USD. USD, not for US dollar, United States dollar, but for the ProShares Ultra Semiconductor Index, ETF, which is a 2x leverage version of SOXL, or SOX in this case. So SOXL is a 3x leverage, USD is the 2x leverage version. And USD can honestly be a much better performing ETF because it has less leverage. Precisely for the fact that it has less leverage, it will give you less volatility, and because it has less volatility, the returns will be higher. Check this chart out. This chart tells you everything, okay? So we have here a 5-year period, okay? 5-year period, SOX returned 285%, okay? The 1x leverage, 285. 3x leverage, 318%, just a little bit more. But 2x leverage, if you reduce the leverage, you actually get 875%. That's a very interesting finding, right? So here you have a specific case where using less leverage on the exact same index, it's investing in exact same companies, okay? Investing in the semiconductor index, but using less leverage, 2x leverage, will give you substantially more returns than using the 3x leverage. So this is a very important finding and very important thing to share with you guys. Leverage ETFs are only good if you are under the so-called Kelly optimal, okay? And Kelly optimal again for SOX will be 2.4, so 3 is not logical. You should use always less than 2.4, definitely much less. Should be probably close to 1.2 or 2 maximum leverage. And the proof is this chart, right? The proof is this chart where USD, the 2x leverage version, return much better than the 3x leverage. So for you guys who like to talk about volatility decay, this is an example where we have volatility decay because we are using too much leverage with SOXL. And this is the reason why I don't do SOXL. At this precise moment, I don't have USD in my portfolio, but I had in the past USD, the 2x leverage version. Okay, in another comment, you also asked about MU, Micron. Actually, there is an ETF called MUU, which is 2 or 3x leverage. Let me double check here. MUU is 2x leverage Micron. Okay, let me put also the Micron stock and MUU. Okay, and what do we have here? Wow, quite interesting. So MUU was launched in October 2024 and is up 2,600%, while Micron is up 800% during the same period. So this seems interesting, but I can only talk after looking at my indicator. And what my Kelly indicator is telling us about Micron is that the Kelly optimal will be 1.68. So you should definitely be under 1.6 when it comes to investing in Micron, because Micron stock is, although it has performing well, it's still quite volatile. So 2x leverage, even though it doesn't sound too much, 2x leverage, but 2x leverage will have volatility decay. So I will stay away from MUU. Of course, again, if you know 100% sure that Micron will go up next 1 or 2 or 3 months, please be my guest, use the 2x leverage. But I don't know. I don't know where Micron is going at the moment. Well, Micron, if you look at the fundamentals, for example, the forward PE ratio is pretty low. It's like at 6 or 7. when a few years ago was at 20 something. So you could argue that despite the fact that Micron stock went up so much, the forward PE ratio, the price to earnings ratio forward, is now lower. So you could argue that in terms of fundamental valuation, Micron is actually now cheaper than it was in the past. But still, I don't know if Micron is going up over the next few months. I know that it's a volatile stock. So I will stay away from leveraging Micron. I will stay also away from doing any 3x leverage on the semiconductor industry. There are some individual stocks that I might leverage, okay? One of the stocks that I'm leveraging at the moment is Berkshire Hathaway. So Berkshire Hathaway, the legendary company from Warren Buffett, is a very low volatility stock, and I believe it's an underpriced stock at the moment. It has been lagging behind the S&P 500. They are sitting on like $300 billion in cash, and it's a low volatility stock that over the years performs quite well. So the Kelly optimal for Berkshire Hathaway is 3.3, half Kelly 1.6. So at the moment, I'm actually investing in BRKU, which is the 2x leverage version of Berkshire Hathaway. I'm also investing in another individual stock, which is Microsoft. Microsoft, I have done the fundamental analysis on my community. You can check it there. And Microsoft at the moment is like at the lowest valuation in over 10 years. It's cheaper than it was in 2022 during the bear market. Forward P ratio, price to sales ratio, forward price to sales ratio. Tons of indicators are telling us that Microsoft stock is at the moment underpriced. In Microsoft, because it's a very, very consolidated company, the volatility is also relatively low. So what my Kelly criterion says is that the optimal Kelly is 2.7 for Microsoft, and I'm now investing in Microsoft with 2x leverage. If I'm not wrong, the name of the ETF is MSFU. Yes, exactly, MSFU. And the MSCFU will basically deliver a 2x leverage on Microsoft. Of course, at the moment, MSCFU is not performing well because Microsoft has been on a downtrend, but I believe that personally, Microsoft is at the moment underpriced, and according to my Kelly criterion indicator, you can use a little bit of leverage, up to 2x leverage, in order to get better risk-adjusted returns on Microsoft. Okay, guys, so basically now you know my opinion on investing on Micron with leverage, investing on SOXL. There is always a point where leverage might get too much. For certain assets, S&P 500, 3x leverage is okay because S&P 500 is a basket of the 500 biggest companies in the US and the best companies in the world, right? But Micron is only one single stock, is very volatile. SOXL is very concentrated in one single sector that is quite volatile. So I'll stay away from 3x leverage when it comes to semiconductor industry. You can potentially go to 2x, which is a little bit more conservative. And very interestingly, again, USD, the 2x leverage version, performed better than 3x leverage. There are certain things that I will never leverage. I will never leverage commodities. I will never leverage gold, for example, or silver. I don't know where gold is going. No one can predict it. I will not leverage crypto. Crypto and Bitcoin is one of those interesting things. So again, if you look at my indicators, it will tell you that Bitcoin 2x leverage will kill you, will kill your portfolio. But again, guys, if you want more details and like every day, I talk about this on my Henry Wealth Academy. Check the link in the description, join my community, 7-day free trial. You'll get a ton of information. In my community, I have my investment tracker where we have over 30% compound annual growth rate and 81% win rate. If you tell any trader in the world, hey, I have a strategy where I'm getting an 80% win rate. Do you want to know about it? They will definitely say yes. And my strategy is very simple. Find underpriced sectors, find underpriced stocks and invest in them for the long term. And if you want to have access to all my stuff, all my trade alerts and indicators, check the community. All right, guys, if you enjoyed this video, give it a like and subscribe, and see you soon from Hong Kong. Bye-bye.